for all your tax needs.
Hi there, I'm Daniel Lader, founder of Lader CPA & Associates, and welcome back to our ongoing series, Tax Strategy, right here, right now, where we are talking about great ways to reduce your tax bill and skipping all the jargon. The topic for this week is the self-employed health insurance deduction, and especially around the rules for S-Corporation owners, because those rules get a little sticky. So, a lot of business owners may think, I pay for health insurance, so of course I should get that deduction. But for S-Corporation owners, this is one of those tax breaks that is easy to lose if it's not done the right way. Now, the good news is the deduction can be very valuable when it is set up correctly, especially in this day and age when health insurance has gotten so expensive. So the goal for today is to explain what the deduction is, who qualifies, and how S-Corporation owners need to handle the mechanics of claiming that deduction. Now, why does this deduction matter? Well, this is an above-the-line deduction, which is tax jargon. I'm sorry, but that means that it reduces your adjusted gross income. That means it can help lower your taxable income, even if you're not itemizing your deductions on your tax return. Now, it can apply to medical, dental, and vision insurance, and in some cases, qualified long-term care insurance too, but that's another topic. Ask your tax professional about that one. It can also include coverage for a spouse and dependents. So keep that in mind. This can apply to your whole family. Now, who can claim the self-employed health insurance deduction? It is sole proprietors, especially if they have a net profit. Partners in a partnership may qualify if the plan is established through the partnership, and S-Corporation owners who own more than 2% may qualify if the premiums are paid or reimbursed by the S-Corporation and reported on the W-2. That's the complicated one. Now, for S-Corporation owners, that last part, reporting on the W-2, is where most mistakes happen. So, let's talk about the rules for S-Corporation owners and the self-employed health insurance deduction. So let's talk about the rules for S-Corporation owners taking the self-employed health insurance deduction. S-Corp owners, the health insurance plan must be considered established by the S-Corp. Now, what does that mean? It means the S-Corp either pays the premiums directly or reimburses the owner for that. Then the S-Corporation must include that premium amount in the owner's W-2 on the Box 1 wages. If that does not happen, the owner cannot be claiming the self-employed health insurance deduction on their personal tax return. So what does this look like in real life? If the S-Corporation pays the insurance company directly, that works. If the owner pays the insurance company personally and the S-Corporation reimburses them, that works. The owner can have the policy in the owner's personal name, and that works. Now, if the owner is paying it personally, the S-Corporation must reimburse that owner and include that reimbursement on the W-2. If the owner is just paying it personally, but nobody runs it through the S-Corporation and onto the W-2, the deduction would be lost. You can't claim it that way as an S-Corporation owner. It's a lot of extra, but it is worth it because that can be a significant deduction. Now, the premium amount that's being paid, that's the actual amount that's paid, should be added on the Box 1 on the W-2 for the shareholder employee. It's usually not included on the boxes 3 or 5 for Social Security and Medicare taxes, and it will increase your federal taxable wages for income tax purposes, but not the Medicare and not the Social Security taxes. After it's been reported as additional wages to the owner, then the shareholder claims that deduction again on their own personal tax return. It's confusing. The business gets the deduction for paying the health insurance. The owner gets it reported on their tax return, on their W-2 and tax return as additional income, and then gets to claim another deduction to offset it so it nets to zero. Confusing, I know, but that's the rules. We have to follow it if we want this pretty valuable deduction. Now, there's some limitations to be aware of. This deduction is usually limited to your earned income from the business. Now, there's some common mistakes I want you to avoid. First, paying your premiums personally, but never reimbursing them through the S-Corporation. That's a huge mistake. Forgetting to add those premiums into the W-2, like I mentioned, that's a huge mistake too. That ruins the entire process of claiming the deduction. Also, assuming that any health insurance payment automatically creates a deduction. That's incorrect too. And missing any eligibility rules when the owner or the spouse had access to other employer subsidized coverage. Not going to go into that one. It's complicated, but watch your insurance and talk to your professional about it. And remember, this is not a casual reimbursement. Don't treat it like that, like reimbursing your miles driven or reimbursing yourself for office supplies. It's nothing like those reimbursements. So make sure you treat it properly. Talk to your tax professional for help. Now, a couple practical tips for you. First, decide early in the year how the premiums are going to be handled. A lot easier to figure that out early than late. If the owner is paying them personally, make sure it's reimbursed through the S-Corporation consistently. Keep your proof of your premium payments for the records. Make sure payroll knows the amount that must be included on the W-2. Don't leave them out of the loop and expect them to get things right at year end. And review your W-2s and payroll at year end so it does not get missed in January. A couple closing thoughts to leave you with. This self-employed health insurance deduction is a great example of why tax strategy is not just about what you pay, but how you pay it. Now, for S-Corporation owners, this deduction can be perfectly valid, but only if the mechanics and the steps are done properly. A small paperwork mistake on this can ruin that deduction. So a critical thinking question for you. If you are already paying for your health insurance every month, is that being handled in a way that actually protects the deduction at tax time? So, next week, we are going to talk about group health insurance and alternative benefit structures. That one does sound boring, but we'll see how it turns out. So, don't forget to like, follow, and subscribe for future events and tax advice. Visit our website, latercpa.com. I want you to have a great weekend. Keep helping others to help themselves, and let us help you to do just that. I'll see you next time. Bye.
For all your tax needs and more, later see